Week 24 is here. I am Jim, and this is the one stock and crypto podcast that you really like to pay attention to. Last week I told you my stomach feeling was it would be a red week. I told you pay especially attention to the Friday and the consumer price index numbers, because if they were to come in above market expectation, it would be a very bad day. And indeed it was. Inflation numbers came in at 8.6% 12 months over 12 months, and the market took it really bad. It was no surprise, and if you've been listening to my podcast, I told you exactly where we are heading. Personally, I thought that the governments might try to find ways to make the inflation at least at the same level as the previous month, but as we know, it came in higher. What about the trading tips? Well, XPEV gave me a nice profit. Kutera not so good, but still profit, and Zoom is still in the game. We will reveal all of this. You will have the new trading tips, but very first, and as usual, we will have a quick look at the market. What can we expect? Will it be another dreadful week? Last week Nasdaq was down 5.59%. Will it be yet another red week for Nasdaq? I will try to tell you exactly what I think and give you the reasoning why. Very first, you have to listen to the disclaimer. It's just a part of the game, and then I will be back with the market insights.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Sadly, I was right, and it became a red week last week. It was especially Friday where the inflation numbers came in higher than the market expected. And just as I told you, if that would happen, it would be hammock in the markets. And it really was. Nasdaq fell more than 3%. That was the big fall of the week. In total, Nasdaq fell 5.59% last week and is currently at 11,340. And here comes the first lesson of today. It's about technical analysis, because as I told you, if the 12,000 level is broken, you would see a rapid fall. This is how support and resistance work. It's an amazing tool if you know how to use it. The second thing I ask you to pay attention to is that we need Nasdaq now to stay above 11,264, which is that last previous bottom. Because if that level is broken, we would see even faster fall, and we will for sure head down to the 10,000. As usual, I will show you the charts today, because sadly we are heading towards that. It's just 100 points left, and we will break that previous low. And there is nothing, absolutely nothing in the chart saying that there will be any miracles. Sadly, we are heading in that direction. But I will not jump to conclusions straight. We will do as usual. I'll tell you a little bit about the fundamentals, and then we will have a look at the technical chart, and we'll try to make a qualified conclusion overall. And if you are a new listener, my name is Jim. I'm one of the co-founders of StockInvest.us. And during this podcast, I will show you things from our webpage. I really recommend it to use it. It's StockInvest.us, and we try to make technical analysis easy. 95% of the content is for free, and our real aim is to help you reduce your losses and increase your gains. And at the very end of this podcast, we will get to the trading tips, and there you will see why exactly reducing your losses is so important. It became a good week for me last week, despite markets being as red as they became. Dow Jones, for instance, fell to 31,393 points, down 4.58%. None of this comes to a real surprise. Overall, these podcasts, they are really starting to get many. Every Monday before markets open, I give you this podcast and I tell you what I think and I give you the reasoning why. And that's the second lesson for today, is that I want for you try to make up a mind longer than just the week ahead of us, because it has something to do about how you trade and what you trade. Build a strategy. You don't have to make it complex. You don't have to make the biggest Excel sheet in the world. You don't have to read a million books. Just try to make a reasoning. Why do you buy a certain stock? What is the reason for it? Just to give an example, we all know that electric cars are here to stay. It's just a question which one will be among the winners, because all of them will for sure not be winners. This was very clear more than a year ago, that this is the future. And since then, they have been hammered. Some been a little bit up, but then down again. And in this podcast, I give you a quick analysis of Tesla, because it's such an important stock to follow. And sometimes you hear me trade in and out of Tesla, so far with very good success. The thing is, if you are certain about electrical vehicles will be the future, and you have a very long horizons, well, these falls are just amazing for you, because then you can just keep buying electrical vehicle shares, and now it's at a discount. That doesn't mean that they cannot follow further. Last week I told you I would buy XPEV. I bought XPEV on Monday in the trading tips. It was sold with a very nice profit. We'll get back to that one. I'm also accumulating a little bit for the longer run, because no one really knows exactly where the bottom is. I don't think we are very close to the bottom, but in general, that's just the idea. If your reasoning is that the green is here to stay, electrical vehicle is here to stay, well, then you have a slight strategy with a slight reasoning. The more details can, of course, trying to be spreading your buys over different companies to spread the risk, etc. We'll get back to that in small drips over all these podcasts. But this is that one essential thing. Try to have a reasoning. Why would you buy this week? Why would you buy this summer? Why would you not buy this summer? And these are one of the things that I'm really trying to tell you, these deep reasonings. And you heard me going from full exposure in the market to reduced to very low exposure in the market, because I was expecting exactly what we see. This downturn was no surprise to me. I made a small pledge that I would not talk too much politics in this podcast, because politics usually divide people. In my opinion, politics is evil, brings out the worst in people. Sadly, we are at a place where we have huge division within politics, and it really shows off. I cannot avoid talk too much, because in the next few minutes I will try to explain you a little bit about what more is coming. I told you inflation would come. Go back podcast more than a year ago. You heard me say inflation will just grow. You heard a politician say, no, it's transitory. I told you it will just grow. I told you exactly what happened. I told you many weeks ago that now you will see job numbers coming up. And for those following the market knows that last week the job numbers on Thursday came in a little higher than expected. But this will just get worse. Now you will see in the job numbers, they will increase, and the thing is that all of these things will have a toll on the stock market. In a long picture, if we go very long, we know there will be a bottom. We just don't know exactly when. But what I do know after all these years, since 96 being trading stocks, being through several of these downturns, the market always turns long before the rest of the world turns, even by half a year or even more. So that is a longer question. But what are the main long pictures that we see now? So we have inflation came in just as expected. We are heading to a recession. I think it's totally unavoidable. It will be, and it will be very hard. And the question is, how long will the recession be? And here is that politic part, which I try to avoid for as long as possible to discuss. You hear President Biden say, oh, it's the Putin tax that causes the high gas prices, the inflation. Nothing can be farther away from the truth. Sanctions, the handling of COVID. I will not repeat everything because you heard, if you follow me, you heard these things before. I gave you the reasoning why COVID would cause logistic issues, why logistic issues would cause inflation, etc. And the thing is, this denial of fact represents something which is labeled woke culture. The woke culture is here. Sadly, you see it in the EU Parliament, you see it in all the governments, you see politicians that have no grip of true reality. They are more considering things that you can label woke. And this is one thing that I think will cause huge problems forward. Because most politicians, they haven't been in work. They are broiled at some politician school since they were very young. They have been filling their head with ideologies which they are trying to follow, whatever it is, right or left, it doesn't matter. And they lack that real grip. Of course, governments have substitutes, they have support in decision process in different departments or whatever it is. But in general, we see that politicians with no grounding are making a lot of rules. And sadly, because of this composition, I'm pretty sure that, for instance, the sanctions against Russia, right or wrong, it's not about that. I think they will continue. That will lead, as I told you, to energy crisis. We are heading into winter. It will be here in just a few months. Germany is running out of energy. They will have to decide which company will have electricity to produce their goods and which will not. And all of this, along with the grain and the corns and all the things been in the news, they will just push. And my point was that given the politicians that are running the world today, United States, Europe, even small countries, they are not able to handle this kind of situation. Meaning that, in my opinion, they will just prolong the suffering, meaning that we cannot get a grip. So now I will rewind. So you heard me say this. What does this mean? Well, it means that I think that there is no way that we are finished by this anytime soon, because the politicians are going to make a lot of wrong decisions. China said that anyone fiddling around Taiwan, we go to war and we will fight to the very last man. So now we have that Taiwan conflict even more hot than ever. You heard me talk about the Taiwan conflict a million times. Well, now it's hotter than ever. We know that the military complex in United States are pushing the war for whatever they can, because every country now is increasing their arsenal. US military industry, and I told you, buy Lockheed, buy all of these stocks, because they will just go up, and you can just follow the Senate in the United States and you will see all of them heavy loaded in the war industry stocks, which are just raking in money now. You can do the same thing, and this will not stop anytime soon. And sadly, a depression on all of this increases the chances for even further conflicts. So this is the very long picture. I don't see, given the current situation, any relief yet. Meaning that I would not put all my money on the stock market. I would never even bet on it as situation is now. It might be that I can increase a little bit from my very low. But in general, this is the idea. It's not the right place to be yet. But saying at the same time, the volatility is the right place if you are a trader, because now you can make money. And this is the market which I personally love, sadly, is because when you have these super red days, just buy. There will be a green day and you will have plenty of profit. But we have to make a conclusion what will happen this week. So we know the overall sentiment is somewhat red, and there is no real things pointing towards green markets. Last week there was a slight chance. Market was flirting with some sort of temporary bottom that could lead for 1 to 6 weeks green weeks, but then inflation numbers came in hammering the market, and on Wednesday you will have Fed decision in the United States. That's one of the things that you want to pay attention to, because they will have to increase the interest rates. Some are speculating that they will go very hard, do a 0.75% increase of interest rates. This will make the market, if it's 0.5, it might give very green day. If it's 0.75, a little bit hard to say. But now we are in a situation where more of these negative things will come. And on Thursday we will have job numbers, and I think that we'll just see job numbers keep weakening. So from a fundamental point of view, the two big item tickets this week is a Fed decision on Wednesday, and job numbers on Thursday. I don't think any of them will be very good, so there are no reason why they should push market upwards. In addition to this, again a little bit politics. Russia is never going to lose the war in Ukraine. We hope, some may even pray that will be the case. But Ukraine is too strategic point for them. You heard China saying that no one will go through Taiwan because Taiwan is strategic for them. Back a few decades ago, Cuba was a strategic point for United States. They will not back down. There is no reason why Russia will back down from Ukraine, meaning that at some point, any day, they might even use more heavy weapons to show their actual will for total destruction to reach their means. At the same time, Europe is pushing more and more long-distance weapons into Ukraine, so this scenario is coming up. So on the sideline, I always told you, keep an eye on the Ukraine conflict, because that will give you the day-to-day changes for sure. Don't sit overnight, don't sit over the weekend. I will not repeat this so much. But now we are again heading into a situation where I think that you might see more negative news from Ukraine. Some already starting to almost forget it because it's lasted for a few months now, but I think we are close to that part where we might see more escalations. Peace talk seems to be out of the pictures. No one is arguing for peace, everyone is arguing for more weapons. We will soon go to the charts, but a few other things. Oil down $1, still trading at 118. I think it will just continue upwards. What does that mean? Well, oil companies is a nice place to be. Should be somewhat safe place to be as well. There is no reason why oil should start to fall. It's more likely to head up to $200. Gold, which I told you, in my opinion, should reach 2,500, increased by $2 last week to 1,859, is moving more or less sideways. Why do I mention gold? It's because gold reflects some of the market things, what is happening in the market things. I got a very good question from a user on Discord, what I think about gold, why it's not rising. Well, some of the issues with gold is when interest rates increases, money flow into secure items, and this usually put a small toll on items like gold. You can expect, because now we will see interest rates increase very fast across the world, and it will just increase, so gold can be under somewhat pressure for a little while. But at some point, the only way to get out of a recession is starting to decrease your interest rates, and that should again bring gold more in the topic. So right now, I'm not sure we will hit $2,500 anytime soon. It might be that we'll be floating anywhere between $1,600 and $2,100. Hard to say. The other thing which I was mentioning when 10-year treasury yield was down at the 1 something, keep an eye on it, because as that one goes up, the market goes down. It's just how it is. 10-year Treasury yield increased another 6% last week and is currently at 3.15, and I don't think it will stop anytime soon. Repeat last few podcasts. So what does this number mean to you? Well, you can invest in secure items, bonds, yields. It will not give you too much percentages, but it is also a trading instrument. Before heading to the charts, here are the signals for the week. Analyzing more than 38,000 tickers in total, 26,000 qualified for these signals as we speak. Only 80% is giving a buy signal, down from 26% last week. Nasdaq from 21 to 11, New York Stock Exchange from 27% buy signals to 12. London increased by 1 from 12 to 13. Tokyo Sheshen down from Tokyo and Sheshen is down from 39 to 34 for Tokyo, and Sheshen is down from 35 to 29. What does this mean? Now buy signals, for instance, at Nasdaq and New York Stock Exchange are very low. That means increased volatility. So again, we should see very high swings. Like a day-to-day can open very, very bad, then go to green. It's just that kind where the bulls and the bears are fighting, trying to find ground. So anything can happen. This is the classical period where you want to buy when trying to find the day low, even being able to have a 2, 3, 4, 5% swing during a day. Everything indicates this is exactly how the week will be. So we know, now we'll have a look at the charts. If you're listening to this podcast at Spotify, Apple, wherever you are, this podcast is also available on YouTube, where you can see charts. You can even see me if you like, and all the other things that I present. And so we know fundamental, there is no reasoning from the fundamental side why market should go up this week. Wednesday, Thursday you pay attention to. The signals say the same thing. They say volatile week. So we have negative and volatile. But what do the charts say? Of course, I will use a chart from our page at StockInvest.us, and you just type in the ticker XPEV or right Nasdaq Composite. You will have the chart, and what you will see is exactly what I told you many weeks ago, that it is in a falling trend. You can expect it to continue it in a falling trend. Last week it was heading to the middle of the trend, and usually then it will turn, it will go down. But here is the main thing. The important and critical thing is to stay above this level, 11,264. This is the last support, and if this is broken, we are heading for 10,500 in no time. So how and what are the things that we should look out for? Well, we know there is some support. At the same time, the volume is not following the market very well. Relative strength index is very high. So there is nothing, there is no support from the moving averages, as you can see here, the dark blue and the light blue line. They are both giving sell signals. There is even a sell signals from the relation between these two, because last week market didn't manage to continue up. Then we would have a buy signal. Just rewind 1 week back if you want to hear me saying these things. So everything is indicating a very fast fall. There are a few other things reasoning also why things will be turning fast down, but I would just, for the ease of it, you can see this relative strength index here is very high. It's 50, it's turning down. It was topping up at some 60s, now it's turning down, and it can go below. Last time markets had some sort of buying positions, it was down at 23, 27, 28, being oversold. Sadly, the charts indicates to me, and that will be the conclusion of a very long market section this time, but sadly this indicates to me that we are heading for 10,500, and trying to say will it be a green or red week. If we do 10,500 very fast, meaning the first few days of the week, we can have a rebound by the end of the week where we end somewhere the same where we are today. There is very little chance that we will have an upturn. If that happens, the market will meet resistance at every single point, 11,500, 12,000, 12,500 upwards, which shouldn't be a fast journey unless there is something very specific happening, very special. Putin dying or peace agreement or something out of the blue. That can be the one thing that we need. Right now, heading for a negative market. I think it will be a negative market. In worst case, it will be a really bad week. Best case scenario is that we are bouncing back up by the end of the week, somewhere close where we are today. Final evaluation will be red week. I sadly think by the end of the week we will be just a qualified guess, somewhere between 10,500 and 10,700. And again, as I said in many of these podcasts, looks to me we are heading for 8,000 at Nasdaq. Enough of this. Next section, we will run very quickly through some of the major stocks: Apple, Microsoft, Tesla, Bitcoin, Dogecoin, and then you will have the trading tips. We will run through a few quick analyses using a little bit long time on the market section. I will try to make this one shorter. What I can say that from last week's analysis, I was wrong in all of them, simply because market fell a little bit more than I thought. I thought Apple would end somewhere around 145, ending at 137. Direction correct, the rest of it was somewhat wrong as it fell hard. Same thing with Microsoft. I said 267 and it ended 253. I said 750 for Tesla, ending at 696, etc. And very off Bitcoin and Dogecoin, but we will get there soon. We will do like this. We will quickly run through the charts, see what we see. And then this exercise is very good. Even though you do not trade these tickers, you should have a look at the charts. It's a very nice tool, and the more you learn, the more sense charts make. So I'm pulling up the Apple chart. What we see is a reflection of Nasdaq, kind of natural. We have a sell signal from the short-term moving average, long-term moving average. We have a slight divergence in the price volume, meaning that the price is falling, the volume is going up, but this is not a sell-off by any means. So I wouldn't put too much emphasis of that. Sometimes we love exactly to see that. We love to see volume going up as the price falling down, but it has to be much higher to be a classical sell-off. Sell signal short-term moving average, sell signal long-term moving average. Some support where it is today from previous trades around May. In the middle of the trend, everything indicates that it will fall down further down towards the trend. And sadly, that is exactly what I think will happen, because if Apple for some reasons should start to push up, it will face resistance at 140, 145, 150, and it's quite much resistance. Downside, no real good support, so it's that psychological support around 135, 130, these round numbers. You should see some small bounce up, struggling a little bit, but if broken, it should fall very quickly to next level. This is exactly what I think. I think that we might see Apple as low as 120 during the week. My guess is that Apple would end at 100 and let's say 25 by the end of the week. Microsoft, same like Apple, you see the exact same picture. Relative strength index is 50. It's not high, it's not low, and it's not low enough to say that there is real buy signals. And you may wonder, if you haven't heard anything about technical analysis, this is totally new for you, and you heard some relative strength index. Well, relative strength index only measures the amount of days going up compared to going down during a certain period. In this case, it's 14 days. So what is this mumbo jumbo? Is it some sort of magic tool? No, it's absolutely not. It's just trying to give a picture. What we know is just common psychology. If there is 90% optimism, let's say that the relative strength index was 90, we know there is too much optimism, it can only go down, because you cannot have 200-300% optimism. It will reach a maximum of 100 and then turn. Statistically and based a little bit on individual shares, these high levels, in this case it's 75 for Apple. Checking history of Apple over a long time, we can say that every time relative strength index is up towards 75, you are usually heading for a downturn. It's just natural movements. There is there is too many positive, and they will just start to sell off their stock, and it goes down. Read more about it. You can go to our blog, blog.StockInvest.us, and you will find very much nice information. On YouTube, you will find tutorials, you will find videos by me, where I try to explain many of these things. Sell signals, short-term moving average, long-term moving average. There is absolutely nothing positive to say about Microsoft as is. We need to see an upturn, and sadly that upturn has to be where it is today, so it has to bounce up today. At least then we get a double bottom at the same level, but if broken down, you should just expect Microsoft to continue down, and that's exactly what I think. I think it will head towards the bottom of the trend, around 240, maybe bounce a little bit up. Target for the week will be 243. And then there is Tesla, and if I'm not mistaken, Tesla has asked to do a 3-to-1 split, splitting the stock to 3, getting down towards some $230-ish per share, depending on the price on the time of the split. But also Tesla is in a falling trend, same picture. The only thing is that Tesla is very much above last bottom at 628. So it has a fair chance of turning up. Support at 650. Relative strength index a little bit better than in the others in the term of direction of relative strength index. But sell signal, short-term moving average, long-term moving average. And sadly, it looks like Tesla also will go down. I will have a target by the end of the week. It depends exactly when the split will be executed, so you have to convert it if it happens, but my guess is that Tesla will end let's say $610 with a week, with the possibility of breaking even further down on the 550 low during week. Why do they do these splits? It's because it's just psychology. People have a tendency to think that 250 is cheaper than 700. In reality, it's not, because there is just more shares available at the same time. But that's how human psychology works, and that is why you should learn a little bit about technical analysis, because it tries to explain these things in patterns and in trend lines and moving averages, etc. Then there is Bitcoin. Last week I had a target for 34,000 for Bitcoin. I gave you the reasoning why. I thought that the support would hold. I told you if 28 is broken, it should fall very, very fast and can fall very hard. Sadly, that happened, and you also heard me buying Bitcoin at 30,000. Now it looks like I will have to take the loss in Bitcoin, because now all that previous support is resistance. Bitcoin faces huge resistance between 28 and 32,000. Only if it breaks 32,000 up, you should see a rapid movement upwards to 38,000. But there's nothing, absolutely nothing in the chart, given that last week's development, indicating that that will happen. Sadly, everything looks like we are heading for $20,000 for Bitcoin. And you may ask, so what about the Bitcoin you bought? Will you sell it? Will you hold it? There is no, last time I did a good trade in Bitcoin, I bought when it was 30,000 and it went up to some 65. Now I bought again on 30, hoping that the bottom will hold. The thing is, and as I also told you, is just a small investment, because this is a risky play. It's not like I invested all I have, because I'm not at that anywhere close to that. You can do that when it's a very nice upturn trend, everything looks good, but not in a falling trend. That is what you call catching a falling knife. You should never catch a falling knife. But sometimes you place a small bet. I did bet Bitcoin at 30,000. If there will be a rebound up towards 28-29, I will most likely sell, with the expectation that I can buy back Bitcoin around 20. Because right now everything is sadly indicating that Bitcoin would just continue down. It was such a good sign all through May that Bitcoin was bottoming, but now it is not. We need that huge market lift. So overall, you see that same thing which I tried to mention in the market section, that long negative pessimism which is pushing everything down, and you need to turn it. I also do Dogecoin. That will be the very last analysis before you have the trading tips. And you heard me getting into Dogecoin at 20 and went up to 40, made very nice profit, sold at 40, then I rebought at 20, still has it, and that has turned, of course, into a loss, as Dogecoin now is down at 0 cents. You also heard me last week that I was tempted to buy a little bit more Dogecoin, that it would be a stupid move, but I had maybe wanted to increase. Sadly, I did. I fell for the temptation. I actually got more Dogecoin at 8 cents, just to see it down at 6 cents. But again, this is just pennies. I can sit with these for years, because at some point, maybe not Dogecoin, but I think Bitcoin will yield good. Not too much to say about Dogecoin, same as Bitcoin. They are heading into oversold territory, which means that you should have a reaction up. The problem is that there is so much resistance above that unless something very, very special happen, you should not expect too much from this. That was the end of this section. Now I will tell you about the XPEV trade, and I will give you trading tips for the week. Finally, we are at the trading tips. Perhaps you skipped the other parts, going straight to the conclusion. That brings me to lesson 3 and the last for today. There is no easy money. If it sounds too good to be true, well, usually it's not true. Easy come, easy go. And you heard me saying that I think it will be a hard week. I even think the weeks ahead of us will be hard. So we are trading in a negative territory. This implies a lot of things, but also how we trade. Still, despite I don't know how many weeks Nasdaq been red over the last 5 months, we can count, but it's just been red. I've been able to be in green and continue to deliver good results. Last week was no exception. I went green. Did you go green? Why did I go green? Well, a few things. First off, I was lucky with the picks. The other thing, I used stop loss. Simple facts, I told you I'm usually busy, so I run a stop loss. That stop loss cost me some profit, but it also saved losses. And we are heading towards a tough week. I will give you trading tips for the week ahead of us. There will be 3 of them. But I think it might be a tough week. We have to be very smart. How do we play the game? I will show you the charts. just so you can understand me a little bit better how I will try to play the game to go into green. But last week I told you I thought there was money to be made in XPEV. I said try to get in as low as you can on Monday. That's how I do it, and usually there is some hours that you can play, but half an hour, 40 minutes after markets open is usually a low time. Now I was able to get XPEV for 24.40. Just to see XPEV have a very nice week. I put on a trailing stop loss, 5%. XPEV went up to 28 high. Fell a little bit back. My stop loss was triggered at 26.15, but giving me 7.17% profit. So XPEV, I could have 12-14% profit. Super happy with 7.17. As I told you, I'm usually too busy to pay attention from day to day. And in addition, these things which I do buy on the Monday, sometimes it's not Monday the best day to do it. But for this podcast, for this session, I wanted to give you something that you also can follow if you want to. You should do your own due diligence, not trust my words exactly all the time, because sometimes I'm wrong. But here is the thing, when I'm wrong, usually things are solved by the stop loss. Hard, brutal decision, just sold. I bought Qatar, that was the second tips. 44.20, had a very nice rise, I was up 7-8%. Then it started to fall back, had a 5% stop loss. It was cut at 44.72, giving me 1.18% profit. So I could have 7 in Qatar, I could have 13% in XPEV, but I'm too busy. And usually, even if you watch the screen, your mentality, your psychic, your human nature is the way that you have hope. So most people, when they see things go down, they find a million reasons why it should go up, just increasing the losses even more. To be that brutal trading machine is very hard. Usually requires skills, that you have done it several times before, that you use different techniques like stop loss levels, volume changes, etc. to decide exactly when to sell, when to buy, etc. The much easier way out of this, if you don't have time and for sure don't have that trading mentality, is use trading stop loss. In my case, it is I do not have time. And also this week I will give you 3 trading tips, but like not last week but the week before, I will go to do charity work. And just a quick side note, so many years ago I started this company with my partner Vytautas, and we had several goals. One of them is to help you increase your gains, reduce your losses. But in addition to this, we wanted to do social work. So even when the company was in red, long before people were starting to sign up to our services, and we got the kind of traffic that we have become very big, very happy about that. We were donating money. So if you're listening to this podcast, I can just mention using the code podcast, you will get 50% discount on subscription. But you're not only getting that, in addition to this, you can be assured that some of the money will go to charity. And this winter we gave a lot of things to day centers here in Lithuania, which are struggling. They are out in small communities. Sadly, there are some alcoholism in these communities, and day centers is a safe haven for kids. So we donate PCs, PCs, games, all kind of equipment, but we also made a small pledge to help them fix their locals. And 2 weeks ago I was making it with some friends, making totally new floor in one of these day centers. Tomorrow I will go off again, not only me, but my friends and colleagues as well, and we will go for a second day center where we will try to make new stairs and help them make that day center useful and last for years. Doing so, I'm busy. I cannot sit in front of the screen. Stop loss helps me. And that last open trading tips last week, Sumerica. I told you this one, I think it will go to 30. Well, it went up to 0.2860, didn't hit 30. Fell a little bit back, currently trading at 0.24. I bought it in week 21 when it was 22.30. I told you it was a trading tips then. I told you it was a trading tips last week. So even if you bought last week, you would have made money if you follow the tip. It's still open because I think it will hit 30. So I decided not to keep a stop loss for America. So it will continue. Here are the trading tips for this week. You will have 3 of them. In addition, I think Sumerica is a very good buy at current level. It's open in my portfolio. You decide for yourself. I think there is money to be made. It's a penny stock, high risk. You shouldn't put too much into it, but it's one of these things that can yield very good. But to make you understand the trading tips, I will show you the charts for the 3 trading tips for this week. So if you're listening at podcast, at Anchor, Apple, Spotify, whatever, remember you can see this on YouTube at StockInvest channel at YouTube, and you will see the charts, and that will make maybe the reasoning why. And maybe you remember board drilling. We bought that a long time ago, did very good profit in board drilling. I can check, but if I remember correctly, it was many 20% we made last time. Now I'm hunting board drilling again. I have to give you some trading tips for the week. I told you it will be a hard week. I have told you I think oil will go up, which means that energy stocks are good. Here is board drilling chart, and as you can see, board drilling has been doing very good. It is currently at 611. It was up at 665, also had a fall last week. Sell signal from the short-term moving average, but buy signals from the long-term moving average. So here is what I plan. I think that markets will continue that very negative sentiment from Friday. So there should by any means be a sell-off in the starts of the markets today or Monday. That could bring a board down. If I'm able to get board anywhere close to the support at 550, I think that will be a super good chance for investments, because in the long term it's up. Volume is following the stock nicely. Volume fell as the stock was falling. We want to see that. Currently it's pretty risky where it is now at $6.11, because anytime with no support below, it can fall very fast to $5.5, giving a loss of 9%. So for board drilling, the very first tip of the week, I want to get this as low as possible. I think there might be a very good opportunity with a red start, especially getting board drilling around 550. I cannot tell you now exactly where I will buy, because the market will determine. I will follow the stock, I will follow the volume changes to see if I'm able, because I think it will have a dip, may very well end red on the Monday, maybe even Tuesday, but I think then volume will continue up, board drilling will continue up. It will face a lot of resistance around 650. So I'm seeking that level, hoping to buy board drilling somewhere, let's say 550, 560, 570, have a bounce up maybe 10% around 650. That is that first trade which I think and hope I will do. So board drilling is the first tip. The other tip is UFP Technologies. It's the same thing here. What I do not like is volume is way too high as the stock moved up, meaning that right now as we speak the price is too high. At the same time, very nice trend, a lot of support below. So if we get the same thing like I hope I will see in board drilling, that we have a small fall in the morning, hopefully a big one, I will pick up, because I think this trend is way too strong. This one has buy signals from the short-term moving average, long-term moving average is within a rising trend, so everything looks good. The reasoning is the same. I think markets are struggling. I'm going for stocks which I think can handle a bad market a little bit better. The risk is always there. I hope to go in low. I put on a trailing stop loss. So in worst case, I will lose. In this case, I will put a 5% stop loss. I will lose 5%. So I stand to lose 5% from the moment I buy. But that should be it. If I'm lucky, I will be hitting this one exactly. I buy on the very low today, during the day. Usually I don't hit the exact bottom, but I'm somewhere close to that bottom usually. And from that point, I think it's a fair chance that it will have a rebounds up. Now the third and the last trading tips is Uranium Energy Corp. You see somewhat the same thing here. What I really like is that the volume was following the stock so very, very good, then fell very hard as USC, uranium stock, fell. Relative strength index is way too high, and usually you do not want, but good support around here. I can only hope that it will fall to 350. I will be able to pick it up. I don't think that will happen. I think it can have an intraday though, maybe to 370 with a fair chance of picking up. So I'm hunting this very nice volume formation, lots of resistance above, but I think there can be 3, maybe 4, 5% to be made. It's not the best tips this week, but it is a tips. As always, do your own due diligence. Buy signal long-term moving average, sell signals from the short-term moving average, but it just gave a buy signals from the relation between these two moving averages. So there you got them, Bor, drilling, UFP, and uranium. These will be the trading tips. I'll try to get in as low as possible today and see if I can be green also this week. Hard to say. We will know next week, because then I will tell you exactly how it went. The podcast is finally coming to an end. I will wrap up and rush to the office to my colleagues, and we will create the YouTube version and of course the Apple version and upload it, so you should have it before the market starts. Remember to subscribe to the YouTube channel if you don't, or to Apple Podcast if you like this podcast, and will continue to hear me also in the future. I'm looking forward to a very nice week. By the end of the week, my sons will come visiting me. So I really have something good to look out for by the end of the week. In addition, doing this charity work is also a booster for good, solid feelings. I hope you have some anchors in your life, that you have something that brings you joy and attention. Don't spend all your times chasing stocks, because the market is not now the place, unless you're very good, where you should chase opportunities. You should use only a small part in the stock market, because it's easier to lose money than gain money. You really have to pick them nice to make it. Investing time in friends, family often yields much more. Find an anchor, because if you have a very good anchor, you can handle these red days that seems bouncing, where profits are gone in seconds. Until next week, I really hope that your portfolio will be green this week, that you will be able to put some green into your bank, and that you will have a super nice week. I will be back. Seems like I'm always here every Monday. Until then, have a super good week. Bye.